What if I told you that a simple tweak to your RSI settings could mean the difference between a winning and a losing strategy? Today we put popular RSI strategies to the test, backtesting different settings to see which ones comes out on the top. Get ready for an action-packed deep dive into an RSI indicators. In this video, we're not just talking theory, we're coding, testing, and uncovering the most profitable RSI setting. Stick around till the end for some eye-opening results. Here is what's coming up. RSI Uncovered. Understand how this powerful indicator works, the math behind it, and why traders swear by it. Live coding and execution. Watch as we build an RSI trading strategy from scratch, step by step. Backtesting in action, where we put our strategy to test using the real ES futures data from the past year. Setting showdown, where we pit different RSI settings against each other. Final verdict, the moment of truth, we reveal the most profitable RSI settings backed by real data. Don't miss this one. By the end, you will walk away with a rock-solid RSI strategy you can start using today. Now let's break down how RSI is actually calculated. Don't worry, I'll keep it simple. RSI stands for Relative Strength Index, which helps measure how strong price movements are by comparing gain to losses over time. EMAs are commonly used for RSI calculation, so we're going to be using EMAs in this case. If you want to know about the math behind EMA and how they are calculated, watch our previous video where we did a deep dive into moving averages. Now let's start with a series of prices. P equals P1, P2, P3, P4, and so on. To calculate price change, which is delta P, at each step we compute the change in price. So delta P equals current price minus previous price, which is here in this case PT minus 1. If the price goes up, delta P is greater than 0, we count it as a gain. If the price goes down, delta P is less than 0, we count it as a loss. This is done using max delta P 0, which takes the positive change, or 0 if there is no gain, max negative delta P 0, which takes the negative change converted to positive, or 0 if there is no loss. Think of gains and losses like a scoreboard. If you score points plus delta P, they get added to your win column. If you lose points, negative delta P, they get added to your loss column. If nothing changes, your score stays the same. This method helps track the strength of up and down movements to calculate RSI. Now let's average these gains and losses using EMA. EMA gain equals alpha times gain plus 1 minus alpha times EMA gain. And likewise, EMA loss equals alpha, which is smoothing factor, times loss plus 1 minus alpha times EMA loss. RS here in this case is relative strength, which is EMA gain over EMA loss. RSI, which is relative strength index, and index is always calculated in percentage from 1 to 100. So here RSI equals 100 minus 100 over 1 plus RS. And if you simplify the formula even more, RSI is basically your gain percentage. Now let me illustrate this with a simple example. Here for the time period we're taking 3. Alpha is our smoothing factor. Alpha equals 1 over n equals 1 over 3, which roughly equals to 0.33. We're taking 6 different prices and days. So day 1 price is 100, day 2 102, and so on. Now for this first step, let's compute our gains and losses. For day 1, price is 100. Since we didn't have any prices before that, the change of price is 0 and there is no gains or losses. For day 2, our price is 102. So there is a price change of positive 2. So we have a gain of 2 on day 2 and there is no loss. For day 3, our price is 101. So we have a price change of negative 1. So we don't have any gains, but we have 1 loss. And use the similar method to calculate for the rest of them. Now let's calculate our EMA gain, EMA loss. EMA gain equals alpha times gain plus 1 minus alpha times previous EMA. EMA loss equals alpha times loss plus 1 minus alpha times previous EMA losses. Let's calculate for day 2. Day 2, our gain is 2. So let's plug in that value there. So alpha we know as is 1 over 3 times gain, which is 2, plus 1 minus 1 over 3 times previous gain, which is 0 in this case, equals 2 over 3, which comes to 0.67. Now let's compute for day 3. Day 3, we didn't have any gain, so 1 over 3 times 0 plus 1 minus alpha times previous EMA gain, which evaluates to 2 over 3 times 2 over 3, which is 4 over 9, roughly equals to 0.44. Now you get the general idea. Let's do the same for the rest of them and you'll get these values. Now let's compute our RS and RSI in step 3. So for day 2, our gain was 0.67, loss was 0, so RSI is going to be evaluated to 100 and so on. So just use the same formula and you'll get RSI in the last column. And notice something different here. On day 5, we had RSI of 89, which is higher and it's an overbought condition. And if you see, the price for day 5 is 105. And when you see price for day 5 is 105. So price peaked at 105. And if you look at day 6, the price came down to 104. And our RSI value was 66.88. So in conclusion, RSI calculation provides insight to price momentums. RSI value of 70 and above suggests an overbought market, which suggests prices may drop soon. RSI value of below 30 suggests an oversold market, which means the prices may rise soon. Now that we understood the math behind RSI indicators, now let's code that in our Python. Let's first create a file called indicators.py. Now let's import numpy for data manipulation. So this squiggly line error says we haven't imported numpy in our folder, so let's do that. Pip install numpy into our folder. Now our numpy is in our folder and the line is gone. Now let's define our RSI function to code our indicator. RSI takes in the price data for which the RSI needs to be computed, along with the time period n, representing the number of past prices to consider. Here, in our case, we're going to be using 14, which is standard for RSI. To compute our RSI, we need at least 2 prices. So we will handle that case here and return NaN if we have only 1 price or no prices. We want to initialize a numpy array to hold RSI value for each prices. So let's do that. Now let's define our smoothing factor. Our smoothing factor is alpha equals 1 over time period n. Then initialize our EMA gains and losses. So EMA gain equals 0. Loss equals 0. We'll use the first price as the initial previous price and compute RSI recursively. Then we need to loop through all the prices in the range 1 and the length of prices. Set the current price at index I. Then let's compute our price change from previous value. So delta price equals current minus previous price. Now let's calculate our gains and losses. Gain is a max value of delta price and a 0. And loss is a max value of negative delta price and a 0. Now let's compute EMA for gains and losses. EMA for gain is alpha times gain plus 1 minus alpha times gain. Let's do the similar for EMA loss. Now let's define an if and else statement for handling super bullish state. If EMA loss equals 0, that implies RSI is at 100%, which makes sense if you think about it. If average loss is 0 and we only have gains, then market is at super bullish state of 100%. Else, let's compute our relative strength RS, which is EMA gain over EMA loss. Then let's compute RSI, which equals to 100 minus 100 over 1 plus S. Let's round that value to 2 decimal places so it's easier. Now, to continue the loop, let's update the previous price to a current price and iterate through all the prices. And finally, let's return RSI. Now that we have our indicators, now let's code our strategy. To do that, let's create a file called RSI simple strategy.py. We want to import backtest and strategy from our backtesting library. The reason we're using the library is to help us simulate trading strategies. So let's import backtest and strategy from backtesting. Backtesting hasn't been installed in our virtual environment folder, so let's pip install backtesting. We also want pandas for data manipulation. Let's import that. Now let's define our custom class called RSI simple strategy, which inherits the strategy class from backtesting. Now let's define some default key parameters for our strategy. Let's set the RSI period as 14, which is our default. We're sold to 30, overbought to 70. We'll use a 2-to-1 risk to reward for the strategy, so let's set stop loss to 10 and take profit to 20. Now let's define our constructor. We're using candle closing price, so let's set that here. Now store our RSI value and let's call the RSI function to calculate our RSI. Here RSI is not defined. We are going to import our own custom RSI from our indicators.py file. So let's import that. And RSI takes prices and the time period. Storing the RSI value in the strategy instance to show it in our result plot. Now let's define a next method which is called at each step in the backtest, which simulates a new time period like a new bar. If there is no open position, we can check for buy or sell signals. Now let's define our buy signal. If the RSI crosses below the oversold threshold, indicating the market is too bearish, we enter a buy position at the current close price. Let's store entry price for the buy order. Set the stop loss price, which is 10 points below the entry price. Set the target price for take profit, which is 20 points above the entry price. Then execute the buy order with the limit price, stop loss, and a take profit. We're buying 50 units of the asset. Since this library doesn't recognize it's a future ES, where 10 points of ES, one contract equals plus $500. So to simulate that behavior, we'll use size equal 50. When you do forward test in the interactive broker, we do have an option to send ES contract, but for now we're going to be using size equals 50 to stimulate that same behavior. Now let's define our sell signal. If the RSI crosses over the overbought threshold, indicating the market is too bullish, we'll enter a sell position at the current close price. Let's reuse the code from above. Where it says self.buy, we'll do self.sell. Couple of things that we need to change here are stop loss and target price. So our stop loss, we're going to set it 10 points above the entry price. So instead of a minus, let's do plus. Our target price, we're going to set it to 20 points below the entry price. So instead of plus, we'll do a minus here. One last thing, we know that last 10 minutes of the market are highly volatile. So we want to avoid entering into a new trade in the last 10 minutes. So let's set a condition for that. Let's get the current time from the data index time. Now let's set a if condition where if our current time is greater than 250 CST, then close the position and also close any active position after the market closes at 3 CST to avoid any overnight trading. And we're done. Now that we have our strategy and indicator, let's create a main file to run our strategy. We need historical data for ES, so let's create another file called downloaddata.py. And if you are following our series, in video 1 we already downloaded ES data using Python. Here we are simply going to copy and paste the same code here. I'll also provide a link in the description to download that data if you don't want to code it again and just want to use the CSV data. Now let's go back to the main file. Let's import historical data from our download.data file. We'll do more imports. These are all the basic imports we used earlier, so I won't go too much detail on the import statements. Now next up is to prepare ticks data. In order to do that, let's write a function to prepare that. I won't go into detail here. We already coded that in the last video. If you want to learn more, please rewatch the last video. Here I'll just copy and paste the code. Now let's define a function to run our RSI strategy called run RSI simple. Our function will use data frame parameters where we test different parameters like overbought, oversold, take profit settings, and let's set the plot to false since we don't want to plot the strategy on the chart. You can set it to true if you want to do that, so it's up to you. Now let's give ourselves an initial balance, and after that let's create a backtest instance. bt equals backtest with data frame, our RSI strategy, which is RSI simple strategy in this case, CAS, which is our starting balance, initial CAS, commission equals 0. We're gonna set the commission at 0. Exclusive order equals true. And the reason we want to set exclusive to true is for simplification's sake. In our strategy, we'll only do one trade at a time exclusively. So any active trade has to close before entering to a new trade. If you want to do concurrent trades, then you can set it to false. But for our video, we're gonna set it to true for simplification's sake. Now let's run our stat with specified parameters. We already defined this stat in our strategy, so we're gonna just copy and paste the code here. Our RSI period is gonna be the same for all the strategy stats we are running. So I'm gonna change the RSI as 14. And based on what parameters we wanna use, we're gonna pass those in our strategy over about 2080 or 1090 or 3070. So now let's calculate our ROI. ROI depends on the risk to reward ratio. So risk to reward equals take profit over stop loss. Since we have two ratios, 2:1 and 1:1, we want to calculate ROI for both of them. So for 2:1, risk to reward equals, we can pass the risk to reward value there. And then for ROI calculation, it's win rate percentage over 100 times risk ratio minus 1 minus win rate percentage over 100 times 100. And we only want 2 decimal places, so we're just going to do 2. Let's do the same for 1:1. The formula is going to differ here a little bit. So for 1:1, it's more simpler. It's just the win percentage. and we are only going to care about 2 decimal places, so that's 2. Now we want to compare our results to find out the most profitable settings. After we do the backtest.run strategy, we want to format those results in a nicer way so that we can compare the stat. We'll define a dictionary of results and output our time frame data, RSI, stop loss or take profit, risk to reward, total number of trades executed, our win percentage, our final P&L, which is our equity final minus initial cash, and then finally our return on investment, which is in percentage. Then we can plot this result in a chart. So to do that, just do plot results bt.plot, and for the volume we are going to set it to false for now. And finally, let's return the results. Now let's define our main function to run our strategy. I'll do main, and let's define the file path for the 5-minute historical data. Which is data ESH, and then the path to the CSV file. Let's define parameters for the RSI based strategy. So for oversold, we're gonna pass 30. Overbought, we're gonna pass 70. For stop loss, we're gonna pass 10. For take profit, we're gonna pass 20. So it's 22:1 risk to reward. And for the time frame, we are using the 5-minute, so let's pass that. We want to have an if condition to check to make sure that the 5-minute data file exists. So let's make sure that the file in the data is actually there. So let's do if ospath, and then minute is pd.read to read the CSV file. If the file isn't there, let's download the historical data for 1 year within the 5 minutes bar. And then save the downloaded data to a CSV file for future use. Now let's prepare the data for backtesting by cleaning and formatting it. Here we'll call our prepare ticks data function and pass in the 5-minute data frame. Remember, we already downloaded the historical data for 5 minutes. So now let's run the strategy. Run simple, which takes data frame and the parameters. Now let's print the results of the backtest. And finally, let's run our main script. Now let's run this file, python main.py. So this is going to download the data and run the strategy. Make sure your TWS connection is established. Since we're fetching data for a year, so it's gonna take time. Got an error saying cannot save file into non-existent directory data. So this is because we don't have a directory to save that downloaded data. So let's go back to our code and make a directory. We need to pass the directory name called file path. So we're gonna do exist okay equals true, If the directory is not there, then it's gonna make a directory, otherwise it's not gonna make a new directory. So this will ensure that there is no downloaded data. It's gonna create a directory and then save those downloaded data in that directory. So let's run our code again. Okay, after we run our strategy with time frame 5 minutes, RSI 3070, take profit to stop loss 20 to 10, risk reward 1:2. So total number of trades is 634. So it took 634 trades. Win percentage was 33%. Final PNL was 4775, which is still plus. Return on investment is 1.26. So this graph shows you a visual representation of all the trades you take in your profit and loss. If you look at the top left, you'll see your peak percentage of equity. You'll see your final equity percentage, max drawdown, and this will also show up here in the chart where you see your peak at the blue dot and your lowest equity at the red dot. And similarly, if you come to the next section, you'll see your profit and losses. So green are all your winning trades and red triangles are all your losing trades. And the another section, this will show you the individual trades. We took about 406 trades altogether. And if you zoom in, you'll see different trades that was being executed. So buy and sell. And you also see the RSI indicator curve over on the bottom. And you can use this to check if your trade was executed like it's supposed to. You can review all your trades to determine your accuracy of the trades executed. So this gives you a nice visual of your equity curve, your profit and losses, and also gives you a chance to review your trade executed. So this is with those parameters. So we're gonna change the parameters. We're gonna change our RSI settings, SL and TP, our risk to reward, and compare all those settings. So in the next section, we are going to compare and show it in a chart form and find out like what's the best settings from all of them are. All right, let's compare the results. We tested our strategy using different RSI settings across 3-minute and 5-minute time intervals to see which combination was the most profitable. To visualize this, we plotted profit and loss on this chart on the y-axis and win percentage on the x-axis. The color of each bubble represents the RSI settings used: green 1090, orange 3070, purple 2080. The size of the bubbles corresponds to the number of trades taken. Now, looking at the distribution, you can see that the least profitable settings was 3070, which ended up in a negative 10K loss. Interestingly, it had a relatively high win percentage, but the sheer number of trades taken made it less effective. On the other hand, the most profitable setting was 1090, racking up over 10K in profit. When you compare performance between the 3-minute and 5-minute time frames, we see a clear winner. RSI 1090 on a 5-minute chart was the most profitable setup, and surprisingly the worst performance overall was the 2080 settings across both time frames. Now let's break it down further with the heat map, which shows the average profit and loss for different RSI threshold and time frames. The standout result, RSI 1090 again on a 5-minute chart, consistently showed positive, strong returns, reinforcing that using more extreme RSI levels on the time frame works the best. Again, 2080 lagged behind with the weakest performance overall. And now for the final reveal. Drum roll please. The most profitable setup is RSI 1090 on a 5-minute time frame with an optimal risk to reward ratio of 1:2. The least profitable setup, RSI, was 3070 on a 3-minute time interval with a 1:1 risk to reward ratio. And overall, the worst performing RSI setting was 2080. Thus, analysis clearly shows that the most extreme RSI level, 1090, on a longer time frame, 5-minute, leads to better profitability, while more conventional levels, 3070 and 2080, overperform. So the best settings overall, and it wins by a country mile is RSI 1090 time frame on a 5 minute. In this video, we focused on comparing the 3 minute and 5 minute time frames, but you can absolutely test other time frames as well. If you would like us to backtest different time frames, please let us know in the comment section below. All the code and materials are linked in the description, so feel free to check them out. In the next video, we are taking this a step further. We'll be forward testing this strategy in a live market data. We'll set up a paper trading account and build a trading bot to execute the live trade for us. And we'll run this bot for about a week and see how we'll perform on the live trading scenario. If you don't want to miss that, smash that like button, hit subscribe, and turn on the notification because the next one is gonna be epic.